shoot and thank God they missed. I'm convinced that I'm here for a reason.
Yeah, it's your boy Crypto Blood, and welcome to another double spending episode. Today, I've got a video I want you guys to check out from Real Vision, and it is actually about ETFs, how ETFs will start the next financial crisis, or make it even bigger, I should say. Very good video. But in this video, and be like right in the middle, there is talk about this new asset class. And I really want to stress this point because for many years I've been talking about how you should view Bitcoin. You should not view Bitcoin as a current cash or cash equivalent asset. M1, M2, you should not look at it that way. I'm bringing this video up just to highlight what the smart money is perceiving this new asset class called cryptocurrencies, or Bitcoin in particular is what I want to focus on, but how they're looking at it. And we want to follow how the smart money looks at most of these things, most of these investment vehicles and stuff like that, just simply because they have the resources and time to do R&D and all of that behind them to make the smartest decision on things. They may have been late. I will say that they were not early on this new burgeoning asset class, but to say the least, though, they are on it now, and you need to really pay attention to how they look at it, because remember, smart money really runs the world. So they're going to allocate funds in a way that when they decide to, they will front run and get in front of everyone else before the masses realizes what's going on. And so again, I say all that to say that in this snippet we're going to play, and I'll leave a link to the entire video, and there's actually a couple parts in this series, this interview with Steve Brigman. And another point that I want to highlight in this video, you guys should really listen to, is how he compares Bitcoin to gold, and why honestly Bitcoin is better. And remember, you have to keep in mind this was recorded back in August of 2017, so this is in the middle of kind of the run up in Bitcoin, the whole frenzy in cryptocurrencies, but Steve still has a very level-headed approach and analysis of this new asset class. So I want you to look at and listen to how he compares Bitcoin to gold, and how really gold is inferior to Bitcoin as an investment long term. The last part I want you guys to really pay attention to is how this thing here, this new asset class, Bitcoin, cryptocurrencies, is going to be utilized in the future as an escape for all the money printing and zero interest rate policies that all of these central banks are heading towards. It's not a hedge yet, I don't even have to say in my opinion, because it's data that shows it's not a hedge. It doesn't negatively correlate with any of the asset classes yet, the traditional asset classes, but it will be. And you have to you don't have to put much in here. You don't have to put much into this crypto game to see it take up a big chunk of your portfolio in the future. So really good assessment from a guy that's not a crypto man, but he's really pointing out, like, look, this is the future. So check this out. You guys will really enjoy it. Leave me your feedback in the comments below. Make sure you guys like, share, and subscribe. Let's get into this. Holla.
There is a developing asset class. Now, in the indexation world, they use asset class in the financial world very loosely, as if utility stocks are different asset classes. They're stocks.
Yeah.
It's an asset class. They behave not much differently than other stocks. But there's a new asset class developing. And a year ago or more, a year and a half ago, when we started writing about it, we wrote about it in terms of pure optionality of an extraordinary magnitude, but toss up. It could go to zero, or it could go up 1,000-fold or 5,000-fold, right? That if you could buy a de minimis amount, like 25 basis points in your portfolio, it could permanently and meaningfully improve your financial life. Meaning, if you have a 25 basis point position in a $100,000 portfolio, and it goes up 1,000-fold, you now have a $350,000 portfolio. Do you know what I'm talking about?
I'm guessing it's Bitcoin.
Okay, cryptocurrency, Bitcoin.
Yeah.
Okay. Without going into details about it now, because it's a whole another set of discussion. But the idea is that cryptocurrencies are genuinely a new asset class. And for the first time, again, in recorded financial history, there is a method to escape both government or fiat currency or coinage and the inflationary effects either the governments wreak upon holders of currency or the market does. So throughout history, anytime a government of some sort had control of currency, they would inevitably dilute it. If you read certain books like History of Money or The Story of Money, like Roman Empire, if you read the sequences, generation by generation, of all the different leaders and how they would debase the currency, they would put alloy into it.
Yep.
They would make it smaller. They would do various things, even just change the weighting system. You can see it's almost mind-numbingly boring after a while. It happens over and over and over
Well,
again.
and the commonality is they all did it until the point where it collapsed.
Till the point where it collapsed. But it's meaningful because over someone's working life, you have coinage and you originally put $100 into it, and by the end of your working life, it's only worth $20. That's the debasement of the currency. It happens right now. So last year, M2 growth, money supply growth in the United States was a certain number, and real GDP growth was another number, and the difference between them was the increase in the money supply in a way that is basically diluting, basically the inflation of your currency of about 3% plus. That adds up. The yield crisis problem is that we had a 3% inflation rate for most of the century, on average. Your treasury bills on their own, if that's where you put all your money, or your dollars were diluted by 90%.
Yep.
But it was okay because treasury bills gave you a higher yield than the inflation rate. That's not happening anymore.
Nope.
Okay. So that's government intervention or manipulation. But then when people would flee, if they could, if they lived in a place where they could, they lost confidence in the government monetary system. So they bought something else, like gold. The problem, though, was inflation. So you buy the gold, and it helps you for a while. And the value of the gold begins to go up, because more people are buying it. But if it goes up, the problem, though, was inflation. So you buy the gold, and it helps you for a while. And the value of the gold begins to go up, because more people are buying it. But if it goes up enough, you have the supply problem, because more supply comes on from any number of sources, and then you get a collapse. So a cryptocurrency like Bitcoin is the first time in history we have a currency that is not dilutable, because there will only be 21 million Bitcoins, 21.000 Bitcoins in the year 2140. Right now there are 16.4 million. The average annualized inflation, if you will, between now and then is like 0.2% a year. But it can't go any further, number one. And number two, it solves the authentication problem. Can't be counterfeited. So the first time people can hold a form of currency that's not dilutable. That could be a store of value. So by the very fact of holding Bitcoin, for the sake of argument, price is wild now. It's not accepted yet. But there are 3.5% more dollars in existence on a real basis. That means my Bitcoin, by just standing still, is worth 3.5% more.
Yep.
Okay. So this is kind of a seminal event. Now, a year ago, even 6 months ago, I was 50-50. Goes to zero, goes up 1,000-fold or 10,000. And I can tell you how to calculate that at home, all by yourself. With that, why don't most people don't know about it. If they do, they've heard so many wildly diverse
They're not understanding
opinions.
it's complex.
You walk away from it. But you really shouldn't. I actually suggested to my clients, I went through an experiment with them, a thought experiment, to see why it would be imprudent of me as a fiduciary to not buy them some.
Right.
And let me explain why that is. So we're not accustomed to thinking about anything that can go up 1,000-fold. Right? How do you get to these numbers? By the way, it's the reason I'm talking about it. I'm not talking about this as a stock idea. Hey, it's a hot stock. If you want a defense against systemic risk, this exists outside the system. What the central banks are doing, for the first time in history, have coordinated massive multi-year attempt to artificially bring rates to zero. And with whatever risks come from that. This exists outside that system.
Yeah.
This is both an independent, diversifying investment, and it's also a natural hedge. Think about it. It's a hedge against all the world's currencies.
Yeah.
They're all trying to depreciate their currencies, but you can't depreciate currencies relative to each other if you're all doing the same thing. So a year ago, I would have said heads or tails, zero, it might get market acceptance. That changed. That equation changed, I think, in terms of probability, just quite recently. So as of April 30th, I think, April 30th, in Japan, do you know about this?
Yeah.
Okay, so you know about this. They changed the Japan Banking Act, and they recognized Bitcoin as a medium of exchange, as a transactional currency. Not a full currency, but they accepted it. They legalized it. And in mid-June, I think there were 5,000 stores in Japan that accepted Bitcoin, including kiosks, like an ATM for using it. It's new, it has its complexities, but it's important for anybody talking or thinking about long-term investing in asset allocation. It's not going away.
All right, there you have it. Hope you guys enjoyed that. And leave your comments in the section below. Make sure you like, share, and subscribe to this channel. Crypto Blood signing out. Holla!
Nigga made it.